Welcome back, everyone, to Fintech Mavericks. I'm your host, Nicole Casperson.
And I'm Drew Glover.
Drew, I've been thinking, every week on the show, I keep hearing a similar theme. Our Mavericks are leveraging content to help drive growth for their personal brands as well as their business.
But let's be real. Most founders don't have the time or bandwidth to execute on that. They're too buried in the grind of running the business.
But that's where the right partner can make all the difference.
So why don't we hand them the same platform that powers our back office?
All right, listeners, we've partnered up with our friends at Brex to bring you something very special, because you too deserve to spend smarter and move faster.
Here's the deal. Open a Brex account to enjoy $750 in Brex travel credits or $450 cash back just for signing up.
And if you're a remote company, the perks get even better. 100,000 bonus points when you deposit $250K into your Brex business account. Then another 25,000 points when you spend $10K on your Brex card.
And on top of the points, you're getting some serious add-ons. $5K in AWS credits, $2,500 in OpenAI credits, plus access to Brex Capital solutions. Not to mention personalized white glove onboarding to help you hit the ground running.
Wow. Want to learn more? Head to brex.com/fintech mavericks and catapult your business with Brex.
Because if you take the grind out of running your business,
you can focus on telling your story.
Spin smarter.
Move faster.
With Brex.
With Brex. I'm so excited to be here on another episode of Fintech Mavericks. Today we're sitting down with Emmalyn Shaw, co-founder and managing partner at Flourish Ventures, an $850 million early stage fund backing over 100 fintechs globally. She was an early investor in Chime back in Series B 2017 times and had a front row seat as it scaled from scrappy disruptor to IPO. She's been in fintech long before fintech was even a thing, and now she's shaping what is next. Emmalyn, welcome to Fintech Mavericks.
Thanks so much for having me.
Yeah, so you've been in venture long before fintech was as big as it is today. What was your aha moment when you realized that this is the future of money?
Yeah, I mean, it's actually kind of funny. My first real job was a product manager for a fintech company, a portfolio analytics software company. And that was in the mid-90s, so well before it was called fintech. It was for like a bunch of math PhDs it was founded by. And then after that, I did that for 2 years. And then after that, I went to investment banking, and I was a general tech investor, tech banker, and then ultimately got recruited out January 1st of 2000 by Jim Barksdale, the CEO of Netscape, to become a general investor. So I did a lot of early stage investing for the last 25 years. And I, did direct to consumer, I did enterprise, et cetera. We sold a number of software companies that sold into fintech. But I wasn't until about 10 years ago that I felt like this is the right sector to focus on. And I didn't specialize in fintech until about 10 years ago. And part of that was for a couple of reasons. I think one is, and even though I had seen it both as a kind of practitioner, as well as kind of invested peripherally through software companies selling into financial services, it's a couple of things that really stood out. One is it's one of the few verticals where if you apply technology, it was very clear that you could both generate massive financial returns, but as importantly, you could create impactful outcomes for businesses and consumers. Right? It's like one of those sectors that just had that uniquely positioned. And then I think if you think about like general tech, there's so much disruption, right? You could disrupt at your heart's content. But financial services has appropriate guardrails, with regulation, and they're trying to protect key stakeholders, which is the appropriate thing to do. But in doing so, it actually meant that technology adoption was highly measured, right? So everything appropriately took time, and you wanted to make sure it was doing right by the end stakeholders. And so as an investor, you were able to be really thoughtful around like, where does technology need to be? What do we see happening? What's most catalytic? And I think you can make a lot more informed, thesis-driven bets with more time and to be deliberate. And to me, that was really compelling. And then finally, like if you just look at the numbers, it's no surprise. You guys are all in it, all our entrepreneurs and co-investors. I mean, we're still in super early stages of infancy. If you look at the financial services public companies, it's about 12.8 trillion. And the public fintechs, true fintechs, represent 4.8% of that. So we are like in the tiniest of slivers of, value creation and opportunity. So I just think there's a lot more ahead. And for me, I saw all of those pieces and said, this is where we should be spending time. And I think I could actually make a difference.
I mean, it resonates with me. Does that have any like alignment to your story, Drew, and like entering fintech and kind of just seeing those pieces? Because I felt the same way when it came to like even just journalism and seeing the stories out there. But was that similar to you?
Well, it's funny because when I first got into fintech, that's where Em and I first met. I was at a company called Steady based out of Atlanta, and at the time we were a money management tool helping folks in the 1099 world improve their financial health during like the big boom of the gig economy, Uber, Lyft, DoorDash, and a lot of low to middle income folks across the country were constantly looking for part-time jobs. And this was also during the time where, Uber was paying $800 for someone to like drive, 2,000 miles and like just by signing up to be a driver. So it was a very hot market, but, our network, now Flourish, they led one of our rounds, co-led one of our rounds. And that's where I was able to meet him. And it was very, very similar type of vision that I kind of saw of one. I was coming out of like pure tech world. I was like head of sales, VP of sales at like HR tech companies, insurance companies. And I just thought that like the largest amount of positive impact it could be made through the fintech space. And I also thought it was just so early at the time from a consumer standpoint of fintech. Consumers taking a big hit, but I think it's like slowly making a return. Now we're in this like B2B kind of infrastructure picks and shovels world right now. But yeah, I just saw it from a huge like impact play that it was a huge opportunity, probably similar to Emmalyn. And I also just thought that there was just so much more work to do. Like there was no ways that just B of A and, some of these B of A, JP Morgan Chase, I can go down the list here. These big banks were just going to hold on to this monopoly of the market forever.
Yeah. Yeah. No, it's fascinating to me because you're both investors. So I'm like, what should I ask both of you, honestly, at some points in this, but, like for you, Emmalyn, what is like maybe the biggest change from like let's do consumer fintech, from consumer fintech 10 years ago to today?
Well, I think if you think about where consumer fintech was, we were in early generations, right? And we were trying, and I think today you've got generative AI, which is really kind of what, as an investor for 25 years, the vision of early AI we were hoping for. And I think what we're hoping to see for kind of consumer level fintech is how do we then create true self-driving money? What does the future of kind of consumer related fintech look like? Can we automate so many of the things that we actually painstakingly deal with? So budgeting, payments, bill pay, your portfolio optimization, your loan refinancing, right? Can all of these now be automated, and can they be proactive and do on behalf of? And I think that's, to me, where we are in terms of future state. And we're just at that interesting technology foundation to be able to enable that. I think the first generation was truly, to Drew's point, like disrupting a lot of the core, traditional retail banks and taking advantage of the unbundling of financial services and this opportunity to kind of leverage unique business models that could really provide a different type of experience of financial services that isn't relying on overdraft fees and minimum account balances and things like that. So I think when it comes at least consumer fintech, to me, that's where we are. The first generation was automating, using a lot of the digital tools, taking advantage of different business models, providing relevant products that were appropriate for consumers. And now we're in an age of, can we now automate that? What can we do to leverage the next generation of technology in a pretty meaningful way?
Yeah. Go ahead.
And then I'm curious on I love and am so excited because, like, frankly, Fiat Growth, my consultancy, was born out of this like Chime mafia. But I'm also just a big believer that Chime today wouldn't have been successful. It's a very different market, and the rounds that come along today just that came along years ago don't come along today. So I am curious, in this next wave of fintech, how are you kind of seeing these companies win and get out of the muck of the noise of these early stage, the early stage competition?
Yeah, I mean, I think the jury's out on consumer-led fintech at this stage. I think we just discussed what we think the vision could look like, and even in that vision, it's not clear whether incumbent platforms or next generation platforms like a Chime or Wealthfront or many others are better positioned, or Robinhood are better positioned to be able to deliver this functionality on behalf of consumers. So I think it is pretty hard, particularly for consumer fintech. I think it's different if we're talking about kind of enterprise or direct or B2B level fintech. I think that's probably a different paradigm. And I think there's a lot more success and momentum happening there as it relates to a lot of the AI solutions and how they might be applied and leveraged, particularly in super hyper verticalized segments of financial services where data is an advantage, workflow is an advantage, right? I think that's where you're seeing a lot more success. But I think in terms of consumer-led fintech, I think the jury's still out, and I think it is going to be, I think everyone's watching to see what does that move towards the self-driving vision look like? And maybe as an extension of that, what do kind of solutions like agentic commerce look like, agentic payments that are also touching facets of that?
Right.
And are you finding that it's becoming harder, especially because of AI and like how people are able to synthesize a lot of the data and a lot of like just information out there, harder to pick the winners?
I think that there's a lot of solutions in my mind that are coming out that have kind of taken the older versions of financial services, of which some have been very successful, and kind of slapped on a lot of the generative AI on top and trying to kind of take them on. And in some cases, I think there's potentially some opportunities. But I think in most cases, the foundational models, just in the last 6 months, continue to improve at such rapid rates that it's very difficult to think about this notion of fine tuning and defensibility is harder to imagine. So I think we really, unless again, going back to like really specific, special workflow that's very unique and data advantage, it's hard to see how some of those folks can be differentiated. And so I think that's where, as an investor, we've kind of really been marveling at the types of companies that keep on coming through. And I'm sure you've seen that, Drew, as well.
Of course.
Around like, hey, what is really defensible? How do you leverage this technology in a meaningful way to be defensible, right? And I think that's the million-dollar question. I think we're trying to find, we've been applying it in different ways, more like tech-enabled and more traditional flows that have been used, leverage kind of older technology, RPM or traditional automation, and really to what extent can we really move and leverage AI to help not just automate, but proactively surface solutions and recommendations, but really more in a B2B construct.
I would agree.
Yeah, I mean, because look, the B2B side of it, and especially since now we're talking about AI, does make a lot of sense, right? So like AI, solves a very antiquated piece of X part of financial services, and then enables a lot more progress or momentum, or just like enables more things to exist and happen, right, for that business. But I guess for me, like one of the big questions really is like, but what about the wealth gaps, right? Is what is like the trickle effect there, or what would, especially when we're thinking of the consumer fintech side and AI, like what do we need to actually see more of? Because I think like some of the conundrum is like, do we have, I always argue, like, we have the technology to succeed. Why aren't we seeing more impact? Or maybe from your point of view, we have seen impact. Should it be moving faster? Like, I don't know. I'm just like curious of your analysis in terms of like, we have all this tech. We're like all obsessed with AI from a B2B standpoint. It like literally is a no-brainer. It makes a ton of sense. Where does this fall in consumer land, where we actually start seeing, because all of us got so obsessed with fintech for this impact, right? Like for its ability to close wealth gaps. Where does it fall in there? And like, what are you hoping to see, or are you seeing from like, especially from founders who are pitching you, are they having those kinds of big dreams? Like, are they finding places for that? And that's what I'm curious about.
I mean, I think if anything, the notion of generative AI and the access to it is going to afford for more democratization, right? So my hope is, in ways that probably even historically have been harder to validate, you're able to power more models that are really reaching kind of mass market, right? And that's the thing that Chime and Chris did uniquely well, right? They were very focused from early on into that low to medium income population. And I think they zeroed in on it. They built product for it. They were maniacally focused. now we've got, and I think that if anything, they've proven that business models to serve that market can exist and can meaningfully scale, right? And so I think to me, that was the greatest unlock and the greatest opportunity for the next generation of entrepreneurs to say, okay, great, there is a potential model. Some of it is related around kind of the interchange and Durbin. So maybe there are elements that are going to be related to kind of financial services and deposit level banking and whatnot. But how do we then build on top of it? What can we provide in terms of automation? Because if anything, it's the low to medium income population that needs a lot of the budgeting automation, the financial planning automation, probably even more so at some level than, the high net worth, many of whom will be still using some degree of human in the loop. That's a much more advanced advisor that maybe in concert with AI will be able to service that high net worth population. And I also think that my hope is that you'll see actually more platforms willing and able by virtue of that technology to serve the entire spectrum in a way that, again, historically, you've seen a lot of financial services only really serving and continuing to serve the highest income population. And I think, again, it's that technology that can democratize and offer more meaningful services where they can afford to support these customers. Are no longer unprofitable customers because technology will be able to provide the services that maybe historically people would have to provide. And so for me, that's the hope. And that's what I'm really watching. And again, I think the jury's out in terms of, is it still inherent? Does it reside in the incumbent players, this next generation of players who are already servicing them? Or is it a new player that comes in and has to take share and acquire new customers and take share away from these other platforms? I think that's a harder value proposition.
And this is where I wonder if VCs will have a true opportunity to invest in the next direct-to-consumer fintech. Is I get very excited because I'm seeing a lot of founders trying to solve very niche problems. Like, I would argue that, like, if someone built a financial app for people that grew up in East Oakland, California, around that specific culture, and they knew it specifically what those challenges were for that cohort of individuals, it would add a ton of value, more than them trying to boil the entire ocean, like sell to all of America. And so I find a lot of founders trying to boil the ocean, like Chime was able to do, but I actually see the solution being it more like hyper specific. But those aren't necessarily VC backable businesses. They might be go-to-market strategies, but they're not VC backable businesses. So I struggle with the idea of VCs being able to find generational businesses, but instead seeing a lot of founders solving kind of these like solving these micro problems. And so I also believe within AI, and Em, I really want to get your thoughts on this. I'm seeing a lot of really great founders building profitable businesses that aren't billion-dollar visions, and them being okay with that. And we actually like losing a lot of talent to people just trying to build lifestyle businesses instead of billion-dollar businesses now. And it kind of changing how we have to approach going out and finding really great talent.
No, that's such a good question.
Sorry, go ahead.
I know. I was saying that is such a good question, Drew. Just props on that question.
All right, thank you.
I agree. I mean, in a lot of ways, that's what we've wanted to see, right? I mean, I think as I think about wanting to help think about the small to medium income businesses and trying to think about how do the SMEs, how are they able to scale? What does it take for them to scale? I think for the first time ever, they have a data advantage that they've never had before.
Yes.
And so my hope is that you're actually going to see a flourishing of this cohort that typically the failure rate's been quite high because the cost to serve, the cost to operate is incredibly high. And so if this can actually be the democratization, the technology that democratizes access and the ability to scale, I think this is a win-win in my mind. So, but yes, I agree that it makes it a lot harder to figure out which ones are truly venture backable and which ones are, standalone businesses. But I actually like to see more evergreen companies out there and scaling without the need for that.
It's fun.
I think they could generate more independent wealth, and that's just as successful in my mind in the long term.
It's amazing. I'm like, so when are we going to have the next, are we having another Chime at some point or no? Wait, what was the consensus there?
I don't know. I think the jury's still out. Personally, I do think there's going to be companies that are,
or is
that
it
will
like,
no, please go ahead.
It's going to be, or is it going to be a company that does the same thing, like what I said with the B2B element, right? Like just figuring out, okay, well, the Chimes of the world exist. So then how do I just to Drew's point, continue to like build things that enable a Chime or even a bank, right, to just be able to do more.
Oh, I think another Chime could 100% exist. I just think the go-to-market strategy will be different. Like, Chime opened up with checking and savings accounts and just acquiring people the way you normally acquire people. Where you think of a company like super.com, who we interviewed a while ago, where their whole go-to-market is, it's like, go buy a plane ticket and we'll give you a 60% discount on that ticket if you sign up for Super Plus. And then all of a sudden you're dropped into like this financial super app. I just think go-to-market funnels are getting really creative right now. And that's, I mean, it's very important underwriting column that you have to check as you're moving through to make sure that you don't get stuck just spending $800 to acquire a funded account like we used to.
100%. And they are being more creative. What I don't know is that a standalone early stage venture back in the way that we know it today, or if this is a pre-existing platform that is really leveraging a lot, or maybe acquiring some of, to your point, Drew, some of these really early stage businesses that have figured out kind of micro segments to really appeal to, and then to kind of stitch it all together to provide a more holistic solution. And I think that's the question I continue to grapple with. I do think a lot of the picks and shovels, to your point, though, are important, right? And particularly as you think about kind of what does it mean to truly automate payment transactions. If you're paying bills on behalf of, if you're procuring services like agentic commerce on behalf of these consumers, if you're taking a more of a kind of almost a personalized finance role and then taking it even one step further, then all of a sudden you actually need authentication, identification layers to validate that this agent is acting on behalf of Nicole and is authorized to do so for both parties, right? So there's a lot of picks and shovels that need to be in place in order for that to actually ultimate, as well as regulation, right? To determine, okay, who's at fault, if this is fraudulent, who ultimately pays, who's culpable. All these things have to kind of come to the surface in order to validate. But I do think that is going to be an important piece of venture opportunities.
Okay, speaking of these like micro segments, where do you see that disruption hitting next, right? If like we're talking about chasing the next Chime, if it exists, or if it's just, in our imagination, in our like fantasies, imaginations, where do you see maybe that, is there like that big disruption in a certain micro segment, right? Is it housing? Is it credit? Is it climate? Is it insurance? Is it like what segment gets you excited?
I'll talk a little bit about where we've seen AI in insurance. It's not the front end of the consumer journey, although it touches a consumer, and I think it's an important one. And it might have implications in terms of the front end of consumer over time, which is on the claims, right? So it's a classic part of insurance, the stack, claims processing. How do you process claims? Your experience with claims, both as a consumer in terms of when is it handled, how is it handled, what transparency you have. There's a company called Reserve that is the leader in kind of outsourced TPA, and it's leveraging AI. It's literally taking the classic claims processing, which is so painful and mundane, and really leveraging technology to meaningfully reduce kind of time to first notice of loss, really making sure that consumers are able to get responses for their claims. They have triple-digit growth. They've got, hundreds of MGAs and self-insured, and they're leveraging, and the technology itself has been what's meaningfully different vis-a-vis so much of the traditional claims processing experience, right? So it's a good example of a kind of a sleepy segment that has needed disruption, where AI has been like beautifully well positioned, even over RPA and others, to really shift value ROI in a meaningful way for consumers who actually experience it, as well as kind of insurance carriers who are using it and relying pretty heavily on it.
Are we saying that VCs now are like interested in the not so sexy parts? I'm not saying you never were.
I was going to say, we were betting on compliance tech well before compliance tech was sexy. I have to say it. I think we kind of like unsexy businesses, for full disclosure, but because they're all important in our mind. Like every part of that needs to be modernized for it to have a better financial service offering for businesses and consumers, right? So we're likely to play in things that are non-sexy from the start, but I do think technology can truly, that's where the unlocks are, where we're seeing that most. Same thing with another company we invested in that's AI native, which is Brico, and that's in the compliance side, but it's around licensing, right? The process for like applying for licenses, MTLs, lending licenses, mortgage licenses is a pain. And you're often relying on like attorneys often and advisors to help. And it's millions of dollars and it's highly cumbersome. A lot of fintechs wait as long as they possibly can because it's a pain, as Drew knows. And they've automated that. They've used an AI stack and they've automated the entire process. And that's been huge. And it's grown incredibly fast because everyone has a need for it. Large companies, small companies, and they all are, it's not just applying, it's maintenance. It's audit and reporting. It's the entire stack. And that's not sexy either, but quite frankly, it's a perfect example of where AI is applied, right? So yeah, I think we are very much looking at those areas.
Yeah.
I am a big believer that just like distribution and data and like arguably talent are probably some of the last moats that exist today. And I'm hearing a lot of businesses right now that are very much like insurance. You talk about, this license, like these are industries very much rooted in data. And I'm assuming that there's a lot of proprietary data and public
100%.
data married together to create this unique data set. But are there specific kind of like directions just like that you're like, you guys are tripling down on right now that you feel like this is within this AI movement right now, there are certain trends that are undeniable we have to triple down on? I'm just curious, like what are the ones that you guys are leaning towards?
No, I think that's absolutely right. And maybe just to reinforce why the data piece in those particular instances are, I think, unique and differentiated is if you think about if you're applying for a license, what you have to apply for, everything about your company is being submitted, everything. And so, yes, you all of a sudden have this data advantage of knowing everything about the business, and you have to do it on an ongoing basis from a maintenance perspective. And then you can start doing audit reporting and all the things that are related to compliance. So that data is incredibly unique and can be taken at scale. And then you can start doing a lot of pretty meaningful things once you have that. So it's a good example of that. Same thing with claims processing, because all of a sudden, guess what? It's not just that you're automating the process, which is lovely. You actually, if you do it well and you have the scale, you can actually inform actuarial underwriting, right? Because you now know what leads to certain claims. Why do they happen? What's the circumstances under which?
Right.
How do we start using that data in a pretty meaningful way? So it's not just that they're automating, it's what you can then do as it relates to kind of improving the entire underwriting process within insurance. So yeah, we are incredibly bullish on those types of businesses that are going to take it and really meaningfully improve the underlying solution. I think climate's another area that we've begun to play with. I think it's still early. We did actually, but we did make an investment that was it's somewhat unique for Flourish in that it has a very human intensive element to it as well. Maybe not too dissimilar from outsourced TPA. And it's a company called Treehouse. And what they're doing is they're leveraging technology and AI in particular to kind of solve for both the underwriting of EV installation, so you're charging at your home, and what it takes to price, understand, leverage the technology. What does your home footprint look like? What can you support? And the reason it's interesting is once they're there, they understand your home, they understand your demand. They do the same thing for businesses as well. Then they have actually a footprint of your kind of your home footprint and what you can handle, and then what other technology you want to. What other green technology you want to underwrite? Do you want to do heat pumps? Do you want to do solar? And then you're able to monitor, what does it mean? What's your footprint at the home? Same thing with businesses. And so the data advantage there is pretty powerful. And why fintech is involved is, guess what? A lot of these things can be pretty expensive. Maybe not an EV charger, but I'll tell you, anything beyond that is quite expensive to invest in. Bidirectional charging. And so all of a sudden you've got leasing opportunities, and you're playing with municipalities, you're playing with kind of government, you're playing with subsidies. And that's where financial services can be pretty meaningful and can hopefully extend the footprint and kind of the investments made by consumers and businesses in the clean tech arena. And that's what gets us excited. So another thing, it's like a data advantage and visibility that you start with a very specific wedge that gets you deep into the stack.
Love it. The data keeps... The data keeps just like feeding the brain, right? Like I love those businesses where the more users that come on board, the smarter the overall business gets. Therefore, the products get smarter and smarter and smarter. But even going back to the EV example you gave, it makes me go back to like what Flourish is all about, which is like this mission-driven investing for, the underserved. And I'm so curious, especially in this like B2B world where B2C, it's so obvious if something's good or bad. B2B, like you really got to get deep in there to uncover, like, is this great for us? Is it bad for us? Exactly. So how, in this market, this greater market transition, how have you held on to that mission-driven investing mindset?
Yeah, no, it's a great question. And I mean, as far as we're concerned, we see the way we think about Flourish is we want to back entrepreneurs that are really providing, that are like, want to develop technology that's going to improve the financial system for the better. And yes, I agree with you. In direct to consumer, it's a lot easier. It's very clear to see, okay, these are the types of business, these are the types of consumers they're attracting. Here's the scale. But we actually don't just look at that. That's an important contributor to watch. I mean, the savings rates and the meaningful impact that Chime has had on its users, upwards of 90% of their customers all say they've seen meaningful improvement in their health as a result of Chime. But that's actually not, that is important, but it's not the necessary condition for us is, does success like a Chime lead others to follow suit and place competition, competitive dynamics for incumbents? Because at the end of the day, most of the US population, as an example, is still banked by incumbents, right? And what they're experiencing is a very high overdraft fee and minimum balance kind of paradigm. And as a result, there were upwards of 13 billion of overdraft being applied to consumers in the banking system, of which, by the way, most of them were the most vulnerable population because it's often folks living paycheck to paycheck, and also underrepresented individuals. And what we wanted to see was a success like Chime actually putting pressure on incumbents. And that's what happened. Not only were they forced to kind of have digital solutions, they also actually were forced to revisit their own business practices because guess what? Chime had no overdraft fees. In fact, they had solutions that actually gave them $200 through SpotMe to actually avoid overdraft, right? So just in case they were short on time. So they were actually the antithesis of that. And so they had this pressure both also from a regulatory perspective, but more importantly from a competitive perspective to reduce it. And as a result, we were down, as of late, 6 billion overdraft fee reduction.
Wow.
And that, so to me, so that's like a systems level shift. And that's how we view kind of the way we make our bets. They are, can we shift the system? Does the entire system improve as a result? So with that in mind, when it comes to kind of infrastructure, it's like, hey, what are the technology modernization opportunities within financial services that by succeeding, they are either improving the way incumbent banks, incumbent insurance businesses, payment players are fundamentally pricing and delivering solutions to businesses and consumers. And do we see that either through competitive pressures for them forced to reimagine the way that they're currently delivering services, or from acquisitions, or from honestly just market share adoption? All three of those in our mind are success. And so that's what we're tracking for. We're tracking these businesses to see how are you changing not just your own customers that you're servicing, but the entire system. How are they forced to adapt to your success?
Ooh,
love that.
Those are really good insights,
Love
right?
that.
Especially for the founders listening to this that want to like disrupt in that space. Like Emmalyn just kind of gave you a playbook of like what exactly like an investor like her and her company is looking for. Yay, right? Like, you're welcome. But I mean, also, thanks, Emmalyn. But that I'm just saying, like, that is like that is key, right? Like, it's not about being Chime or the neobank. It's about how do you think about fundamentally changing a system? How are you creating that competition for the incumbents and all of the things that you said? Very fascinating. Drew, were you going to say something?
I will say, Nicole, what's nice about it is the only way to do that is if you are a leader. Like the only way to create that kind of competitive pressure and that type of shift and change is you have to win. You can't, if you're not going to have that impact. And so that's why they're almost one and the same. It's one of the few sectors that you can really do. You have to be massively successful to create the change, the competitive pressure and change that you need to see.
I mean,
so they go hand in hand.
I love that you're saying this because I feel this way as a media company founder. I do feel like, look, I've been at dinners with my incumbent friends and they aren't always so happy with me. They're like, oh, you creators, but the creator economy, this is like another discussion, but it's this, similar, like kind of similar vibes, right? Like we're now finally at a place where like independent journalists, creators, people building their own media companies are putting that pressure on traditional media. And so, we're like kind of seeing that similarity, but then with fintech being in a much more mature and grown up phase in terms of that. So I'm glad that I always love when I have these qualities that the amazing guests we have share.
Right on.
I know. All right,
I agree.
Emmalyn. So funny enough, we've kind of done this show a little bit in reverse, largely because I think Drew and I were just like so ready to just completely pick your brain in terms of like what the heck is going on in our industry. Yeah, we kind of just like dove in. I didn't
I
ask
love
you
it.
some. I know. I want to ask you. So usually we start with more personal questions, but we did business. We were so business focused first. So like us. But I want to ask a couple of personal questions, and then we can do our rapid fires. But to get I want some of your leadership advice on certain things. So first would be just like you've moved through all these different spaces, right? Like investment banking, VC, all of the places you've shared and been in the industry so long, and you've probably felt like at some point, Emmalyn, you and I probably talked about this like offline at some capacity, but you've probably felt like the only woman in the room at some point. Honestly, I know Drew relates in his own way. He's also been the only woman in a room at some point. You know what I'm saying? Like
he's the only Pisces in the room.
Right. It's true. Right now, he is actually the only in the room in terms of his astrology sign.
That's true.
Because Emma and I, heavy Aries. Anyways, how did that shape kind of how you show up for your founders today?
Yeah, well, look, it's really funny that you say that. In fact, I was literally the only woman in many of those rooms. So much so that sometimes when I'd enter, they'd be like, "Oh, we need some coffee." And I'd be like, "You know what? Me too. Where should we get it?" So I think it definitely takes some humor, resilience, empathy, to persevere. But it's one of those. It is a journey. I think it does form you. I'm fortunate though as well to have a husband who has been a startup CEO for a number of years too, and so I get the benefit of seeing up close and personal the founder journey. In addition to obviously founding Flourish, but again, I think venture firms versus true startups, it's a different journey. And I'm very, conscious of that. And certainly, again, seeing the highs and lows up close and personal, I think is also quite informative. But look, I think the way I approach founders and leaders is really around coming from a place of partnership and collaboration. This is about kind of empathy and trust and accountability. And I think that, and I want to be just as accountable, actually. I want it to be both ways. And it is a marriage. So in a lot of ways, I approach it with that in mind. It's like, how can we be most collaborative? And how can I be ideally the first person that one calls, whether for good or bad news? Because I think if you truly are partners, then, and I don't always have the answers. I'm perfectly, I know that I don't have the answers, but someone does. And I want to be able to advise when it makes sense and be able to connect where it makes sense. But the most important is to feel like there's that kind of partnership through the good and the bad. And that's really how I've approached my founders. Yeah. And I think that role as being the only woman has given me that opportunity to think about the importance of that partnership and making sure everyone's voice is heard and really, being a collaborator.
Yeah. Like kind of just being able to see through that, especially like any founders that are in those early stages that are like nervous or whatever it is. Like you're kind of like, I've been there. I know what it's like. Let me elevate you a little bit and help you, right? Use that voice for good or to share the bad, whatever that is.
Yeah, you also just, obviously, and you know this more than anyone, Emmalyn, you can't just be capital. You have to be more than capital, right? So like collaboration, being able to add all that additional value, again, like a lot of these companies, all they want to do is be Chime. And, Emmalyn and the entire Flourish team got a chance to like ride that entire wave and know how to act every single step of the way. So yeah, I mean, especially this new generation of like the next stage of VC, like it's capital is a commodity. It's like, what else comes with it?
100%.
Yeah. I mean, I wouldn't be surprised. It's like, that made me think like, are founders like, I mean, are they pickier? Like they should be, I guess. Like they're pickier now, right? Like in general, I don't know. I don't investor yet. So, but Are they, guys?
Yet.
Oh yeah, they pick us, so I wouldn't know.
Yeah, you just like they come and pick us. Oh my god, I love it. I love it. I love it. Okay, so Emmalyn, as I was doing my deep dive on you, which I already kind of knew a lot about you, but I will say I did read somewhere that, and this is actually where I'm the only in the room because I have no kids, but you have 6 of them.
Yes.
This is true? Okay, this isn't like a
It
fake
is
Reddit.
true.
This is not a subreddit I read somewhere.
It is not a subreddit.
Okay, Em.
All right. Did you know this? Do you know this, Drew?
I knew Emmalyn had kids. I had no idea she had 6 kids.
I mean,
yes.
just so yeah. So anyway, here's a fun question for you. What has motherhood taught you about leadership that the boardroom could never?
Yeah, no, that's a super good question. And it is really, I have 7 kids if you add my husband, who's probably the biggest child, just for context. And Drew, just so you know, that's how we all
Shots
feel.
Fired. Shots fired.
My wife would say the same thing. So shout out to your husband.
Oh, I'm sure. I'm positive. But I think there's probably 2 things. One is patience is critical. And I think as a Enneagram 8, I can be a little bit more impatient. And I think sometimes, but I think just the notion of patience and probably the power of listening, like truly being an incredible listener. And I think when you have 6 children and you've got, in really understanding, kind of trying to understand where they are and listen. And I think that's been probably one of the most powerful lessons as I think about what it means to lead a firm, what it means to work closely with leaders as an investor are those 2. It's like really how can I listen and really kind of get a read for where they really are? What are they not saying that they're really feeling? How can I help meet them where they are and unpack this? And I think the power of listening is probably the most, probably the single biggest lesson that I've learned being a mom of 6 kids.
Wow, the listening. I thought you were going to say negotiation.
No. It's funny. They're good negotiators for sure. Oh God, 100%. And it never surprises me. But I think it's really that. I also think the other thing I would say is, particularly because I have older kids now. I mean, I have adult age kids now, and then some that are, one is still in high school and one that just went off for college this past weekend. So I've got the range, and that then you become an advisor. You become a guide. You're mentoring. You're not telling them what to do. You're really trying to give them the leash to be successful. And again, in that, as a leader, you're developing your teams, you're working with your entrepreneurs and giving them, again, the leash. It's not, you're not in control, they're in control, but you want to know how to give advice and bring insights where it's relevant. And I think that's, again, very similar muscles, if you will, that you're applying as they get older. So the journey continues. You get to apply the other way around too, so which is nice.
I love that. Yeah. I got to connect you to my mom because my mom doesn't understand the leash metaphor that you just shared. She's still trying to figure out that leash thing and the advisor thing.
I think first generation Filipino moms definitely do not know that. I think it's got to be the second generation, honey. I think that's the way it works. It's got to be second gen.
Yeah, that was, by the way, Drew, that was another thing I don't know if you knew. So Emmalyn and I have the same birthday. Now everyone can know. We have the same birthday.
Everyone should know.
And so we're both Aries, and then we also have Filipino moms. So,
dude, trifecta.
It's a trifecta, which means we know everything basically about each other. Like I know exactly.
We're basically sisters.
Basically the same person.
Yes.
Just like
telepathy.
cloned into another human. Exactly. Oh God, it's so true.
Oh my goodness.
Are we ready for some rapid fire questions to close us out?
Let's do it.
Are you ready?
Yeah.
First thing you do when you wake up.
So my husband hates this, but I seriously check my text and email. It's so sad. I wish I could say I worked out or meditated, but that's not what I do.
Okay, I will pause here to say I just finally started reading The Artist's Way, and I'm on day 3 of my morning pages in an attempt to replace my morning scroll with writing. So instead of waking up and using my phone right away, I pick up my notebook, and the assignment is to write 3 pages of just stream of consciousness. They don't have to make any sense. They don't have to do anything. They can be, I even write, like this morning, and my mind was wandering a lot, and I was like, my mind's wandering. Okay, I'm back. Like you're literally writing whatever. No one reads them. The practice is you shouldn't even read them. Like,
okay.
Either.
I love this.
Anyway, so I'm on day 3, so. Yeah, I'm supposed to do it the rest of my life. So let's see how it goes.
You got to send me this. You got to send me this. Okay.
I will.
Well,
I'll send it
we made this have to be 3 pages. It could be shorter. I mean, but I love that.
Yeah.
It's a great, that's really cool.
Yeah. I'm trying it out.
Drew has a look on his face and he's like, I'm not sure.
No, I could do that. I could do that for 7 days. I don't know if I could turn it into a hardcore habit.
How about you draw? How about you draw something?
Honestly,
are you more
I'm
arty?
into that.
Right?
There you
Yeah,
go.
I am like big drawer. Like you.
Okay.
Like just
I'm a better listener when I'm just doodling away, and it typically turns into something pretty good.
I am for.
All right, I'll do a little bit of both. I'll do a little bit of both.
Look,
Okay, good.
I didn't write the
We gotta
book,
share. We gotta
but-
share.
But I am here for the pact, for this Fintech Maverick pact here, where we're going to try to write something, anything before phone. Okay, great. Well, because I'm 3 days in, so let's see how I go. Update you guys later. Okay, so
Proud of you.
word. Thank you. One word that you would ban from every pitch deck ever.
Inflection and synergy.
Those are really good.
Those are good.
Those are really good.
And now, Drew, every time you're going to look, you're going to be like, there it is.
Oh, no, yeah. Synergy gives me like that instant ick. Inflection, it really depends on the stage because they might not be lying. But everyone else, most people I see are like pre-product with inflection, and I'm like, that word should be nowhere near. You're dead.
Oh my god. Okay, these are actually good to know. I'm gonna think of these because while people don't people pitch me their companies to write about all the time, so I'm gonna look at that.
Okay.
Half the time. Yeah. Okay. Very good. We're packed. Another pact made. All right. So the boldest move you've ever made in your career?
6 kids. At the time I had 4. I chose back in 2007 I was looking at a bunch of different partner roles, and I was pretty earlier in my career, but I was on this pretty fast trajectory. And I chose to become a venture partner for a firm so that I could try to balance being a mom of 4 kids plus a newborn, and stay in venture and stay abreast of technology, build a track record, continue to generate like great returns. So I basically effectively, jokingly got paid less and worked just as much, but it gave me the opportunity to be more flexible and be present to my kids, honestly. And I think at the time it felt like such a big risk because I was coming off of what I thought I was on the leading edge, being a woman in venture and on a pretty fast like promotion trajectory, and to kind of intentionally take a moment to just choose and try to strike a balance for a couple of years was really powerful for me. And it was scary, but it was the right move. And I think it's completely, it didn't derail me at all. In fact, I think economically and whatnot, but even looking back at that time, but it felt really scary. And I say that only because I don't know how many women, but people always wonder, like, how do you do all that? It's like, well, you know what? You got to make some choices along the way. And I think sometimes people don't realize this notion of having it all the time. I think that's a fallacy. I think you've got to make some choices a couple of times along the way.
Exactly. So well said. Last question from me. What do most founders get dead wrong about raising money?
Sometimes I think that founders tend to treat investor and investment firm as one and the same. And they assume that, if they're being backed by a certain firm, they're being backed by that there's a kind of a reputation that carries through. And the reality is that it's a marriage, and that individual is who you're going to be working with. And those individuals are they're very different and distinct.
True.
Right. And so you got to do your diligence. It goes both ways. And you got to make sure you understand who you're partnering with because it's a long partnership. And so I just encourage a lot of entrepreneurs to make sure they do the work and the diligence to make sure that is the right fit and who they want to be in partnership with for, a long time and through the success of the business. Yeah, it's a
marriage,
yes.
people. All right, Drew, you're up.
Real quick. A book, film, or piece of art that has cracked your brain open recently?
Something that I continue, and every time I see it, I continue to feel, inspired and excited. And it sounds super cliche, but I think more than ever in this kind of current political climate, it's super important to me, which is Hamilton. And I say that because
That's
we
a great
need
one.
to be reminded of the foundation of our democracy. We need to embrace diversity.
Yes.
And we need to embrace creativity in a way that
immigrants.
This country, diversity immigrants, this country desperately needs. And so it's something that I think more now than ever, it's more powerful to me.
That's a great answer.
Amen.
A song that makes you feel unstoppable.
It's funny for me. I
Hyped,
love
excited.
Hi. Okay. I can do that. Okay, don't laugh. You promise you won't laugh. I'm older. Okay. I love Eminem's "Love the Way You Lie."
Aww.
And every time I hear
love
it,
a good
I
classic.
swear to God, every time I hear it, I'm like so pumped.
I mean,
Love.
Rihanna's in that song,
Love.
no?
What?
Isn't
Rihanna?
she?
Yeah. Rihanna's in it. Yeah.
Yeah,
Yeah,
Rihanna's
It's
in
just
the
like
song.
I have all these kids, and I listen. I mean, I hear all the new, and they're all great. But
Yeah.
I'm like, this is my go-to. Like, I love all their music too, and it's all good. But it's my go-to.
Look,
I
she's
gotta lock in.
love-
I gotta lock in on putting
Yeah.
on Eminem.
I
love
lock
it.
in. Yes.
M is putting on Eminem, you know?
Exactly.
Yeah, there we go. There we go.
Yeah, that's hilarious.
Okay. Okay, Emmalyn, finish this sentence. The best founders always.
Okay, this is very personal. I think they always deeply connect with the mission of the business that they're trying to solve for. It's something I really look for. It's super critical. And then they can sell the hell out of their vision to all the key stakeholders, customers, venture investors, talent, right?
Yep.
So, but
Right
really
on.
the mission orientation is super critical.
100%. 100%. Here's the last one. Your most unpopular opinion about venture capital.
Come on, Drew.
Leave me on a
Man.
hot one. Leave me on a hot one.
So provocative. Okay, well, I'll say that there are, first, my caveat, there are tons in venture, tons of brilliant people, right, with deep sector thesis and deeply connected. That is true. And despite what a lot of people tend to say, I think so much of venture success is luck. It is luck. It is being there. It is being there at the right time, the right place. Even with all of that good stuff, it is luck. And I think sometimes we forget that. I think they often put other things ahead of it, but I think that's the reality. And having done it 25 years, some are better positioned because now they've done well and then they get to see the best of the best. So they have a disproportionate advantage for sure, but it's still, especially at its core, it's luck. And
Yep. I think that's 100% right. I read somewhere recently that 80% of the investments seed or pre-seed investors make, 80% of those investments, when the product hits product market fit, it is not the product they invested in.
100%.
Which is why we always say the team is king.
Team is king.
Team is king.
And I often say, what we know is 100% the case. We 100% that it's you're going to miss your forecast, whether it be high or low, you're going to miss it. And the chances that this will actually be the business that you ultimately do is quite low, particularly to your point, Drew, when you're talking to very, very early stage founders.
True.
One thing about Chime, though, going back to your love for Chime, I mean, granted it was Series B, but they never strayed. Their deck is almost exact. Their first slides are almost exactly the same as their IPO kind of prospectus. It's incredible.
Oh, for the fintech history books. Well, I'm so glad that Drew wrote that last very hard, provocative question to ask you. Thank you, Drew.
So controversial.
I know. It's like you're like a journalist or something, Drew.
Who am I?
Who are? I know. Learning so much as we podcast. Anyways, Emmalyn, thank you so much. I know we're out of time here, but thank you so much for joining us. I fear if we keep going, we're all going to have too much fun. But clearly, we must get the band together again at some point. But we've made pacts. We've made promises to each other. We've spilled secrets. We've shared our birthdays and our astrology signs. You know, and talked about the future of fintech. So all wrapped up in a bow. So we did it all. So thank you so much. Yes, thank you so much for joining us, and thank you to everyone tuning in to Fintech Mavericks. Be sure to like, subscribe, all of that good stuff, and check out the special offers in the show notes for all things that you can get from our amazing sponsors at Brex. See you next time.